Hi everyone, and thank you for tuning into my channel where I talk about stocks, the stock market, and investing. If this sounds like something you want to get more of, feel free to subscribe down below. In today's video, I'm going to discuss DocuSign's latest earnings report and the metrics and the factors that has investors excited and enthusiastic. In response to DocuSign's earnings report, the stock jumped higher. What I have here on the screen is DocuSign's 5-day stock price chart. You can see around September 8, it was trading at about $55 per share, we can say. And after the earnings came out, when the market closed September 8, the stock price shot upwards and it settled to about $64 per share as of right now. I'm recording this on Sunday evening. So investors clearly liked what they saw in the report. So let's dig into their presentation and see some of the factors that had investors excited. So we'll begin with their revenue growth, and we see here that in its most recent quarter, its second quarter of fiscal year 2023, revenue increased by 22% to reach 622 million. Now, this was better than expected. Investors were expecting revenue growth is decelerating. Investors were expecting a bigger deceleration of the growth, but so far the deceleration in revenue growth as a result of economic reopening is not as bad as feared. Of course, DocuSign thrived at the pandemic's onset when we were all told to remain 6 feet apart from other individuals, and signing documents in person was not ideal in a time when the threat of a deadly virus was severe. Now that economies are reopening, that has become less severe and electronic signatures are not as highly demanded. That was to be understood. So let's move along here and see what the next factor is that had investors enthused about the report. And here we have billings and revenue growth. So DocuSign sells its services on contract terms at times, and so they record that as billings. So when a customer signs a deal with DocuSign, it could be a deal that lasts 18 months, 24 months, 36 months, or it could be a deal that is signed on number of signatures or number of envelopes as they call it. And so DocuSign will record that as billings, which will then turn into revenue as time passes or as the client uses up the services. And so billings is an important forward indicator of revenue, and that in that regard, in the second quarter, billings was 19% higher from the same quarter last year at 648 million compared to 595 million. So revenue increased by roughly 20% and billings increased by 19%. DocuSign delivering growth even after the tremendous growth they achieved last year. They're still growing on top of that despite economic reopening. You can understand investors liked what they saw here. Okay, let's move on to slide 13 here. And here's one segment that I flagged with red marking because it's one that I didn't view as being that positive, and that is operating cash flow and free cash flow. In its most recent quarter, DocuSign's operating cash flow came in at 121 million compared to 178 million in the same time last year. So operating cash flow decreased by 57 million year over year in the same quarter. As a percentage of revenue, operating cash flow fell to 19% compared to 35%. That was not a good sign. Similarly with free cash flow, second quarter fiscal year 2023, the most recent quarter, free cash flow of 105 million compared to 162 million same quarter previous year. So decreasing again as a percentage of revenue, falling from 32% last year to 17% this year. This is not excellent news. Okay. However, when looking at the guidance or forecast for the next quarter that management gave, this was good news. DocuSign management forecasting total revenue in the range between 624 million and 628 million. Let's say 626 million at the midpoint for the third quarter. If we look at last year's third quarter, total revenue came in at 545 million, which I've highlighted in blue here, 545.5 million for third quarter revenue last year. So if they hit the 626 million, it will be a nice improvement from last year. So sustaining that growth that I talked about earlier, double digit growth in revenue. And similarly with bookings, we have here bookings forecast of 584 to 594 million. Let's say 589 million at the midpoint. Compared to last year, bookings was 565 million. So again, evidence of growth, not as robust as total revenue growth. It is slowing down, that is to be expected, but not slowing down as dramatically as investors were fearing. And that can speak to why the stock was up as much as it was. Investors were fearing worse than what DocuSign is experiencing right now. For the entirety of fiscal year 2023, management is forecasting total revenue in the range of 2.47 billion to 2.48 billion. And again, if they do achieve that forecasted level of total revenue, it would be an increase from last year when they reported revenue of total fiscal year revenue 2.1 billion. So again, it would be increasing from the year before. So growth, evidence of growth is sustaining even through economic reopening, even through the elevated levels of growth DocuSign experienced last year and the year before as a result of lockdowns. Solid improvement, solid growth for a company that, in my opinion, has the tailwind behind it. Electronic signature signing has so many advantages over signing documents in person, both for the customer that's going in to sign the document and for the enterprise that's having the client come in to sign. So much friction there that can be removed if it's shifted over to electronic signatures. DocuSign has that tailwind behind it. It should continue growing. And for those of you that are environmentally conscious, DocuSign is your play here. Since its existence, of course, this is according to management, DocuSign has saved 55 billion sheets of paper that would have otherwise been used to sign signatures on. That has saved 6 million trees since its existence. So extremely environmentally friendly. I like that. It makes sense for me. And I can see why investors were enthusiastic sending the stock higher after the earnings report. But if we look at DocuSign's price to free cash flow, which I have here in this sign, trading at a price to free cash flow of 25.5, it's still at arguably the cheapest valuation that it's been in the last 5 years. This is going back all the way before 2019 to 2018. DocuSign is trading at its cheapest valuation. So there you have it. Despite rising significantly in price per share, DocuSign's price to free cash flow, its valuation in terms of each dollar of free cash flow, is still relatively inexpensive, arguably the cheapest that it's ever been. So a solid quarter for DocuSign, good forecast, good revenue growth, and better than feared results going forward. Okay, so that's what I have for DocuSign today. Thank you for watching, and I'll see you next time.
I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular Stock Advisor. Stock Advisor has beat the market by more than 250%. Go to fool.com/Parkev to get your 10 stock picks now.